Hey, good morning, everybody. Welcome to another Daily Market Report brought to you by Mike Buell. Friday, January 2nd. Hope you guys had a wonderful New Year's. We do got a few economic news releases today, so that's kind of why we're kind of doing this report for you. We'll start with the final revision of the market PMI for the month of December. So the previous initial one was at 53.7. It settled at 53.9, still lower than where November's reading. It was in at about 54. And 54, I believe, 0.7 in November. So still down from that. ISM index for the month of December, we had a 58.7 November. Forecast was coming down to a 57 and surpassed that down to 55.5. So manufacturing didn't look too good. A lot of that's being blamed actually on the West, at least the analysts and media is kind of blaming this on the West Coast with the contracts with the ports and the West Coast, that there's being delays presented as the PMA as well as the unions are supposed to be up for contract discussions and stuff. So I know people there, and I know things have slowed down over there. Things were busy for a while, and things have slowed down. But I don't know if I would necessarily believe that that is the root of the slowdown, or the slowdown in the ISM. But anyways, let's continue. Construction spending, month of November, we had October 1.1. We were supposed to trim down to 0.2 in November, and actually dropped at negative, so contracted back in the month of November all the way down to 0.3%. Let's go ahead and take a look at the stock market. Stock market's down. Remember, there's still light trading going on today. They're hoping the Dow would go up above 18,000, close out for 2014. They actually pulled back and it closed in the 17,000 range. And it kind of, it was up a little bit today as when the data came out, came down. So the data actually are the factors for today, as well as, of course, there's continuing oil prices, which I didn't list on there. But in Europe, the European stocks were in red for the majority of the day, and then now some hints got out that the ECB is planning a full-scale quantitative easing program to be implemented here. It sounds like pretty shortly, in a very short amount of time. So that kind of rallied their markets a little bit over there. Let's go and take a look, see what the bond market's doing. And we had a nice little spike, as you can see up there, at 104.19. So that kind of provides us a nice improvement in the interest rates today. So we'll have a nice improvement in the interest rates. So we'll see if this trend continues next week when we get the hedge fund managers back from their vacations and we get more of a normalcy in the markets. We'll see which trend it's going to continue, if it's going to go down or upwards or go sideways for a moment. So next week will be a little bit more normalizations in our markets after this past 2 weeks. All right, have a wonderful week or weekend, and we'll see you guys on Monday. Thanks for watching. Take care.